Good morning and welcome to the next episode of PROPERTEA. The property market has been flying in London anyway. So today I'll be joined by Simon Rubinsohn, who is the Chief Economist at the RICS, to have a conversation about what's happening in the UK housing market. So I will bring Simon onto the stage and we can have a good old chat. So good morning, Simon. How are you doing?
Yeah, I'm well, thanks. And how are you, Joe?
Yeah, very well, thank you. It's very busy, so it's a little bit like, oh my gosh, running around everywhere trying to do everything. It's a great place to be. The busiest that we've been since Brexit. To be honest with you, this has been the best
Really?
start to the
That's
year.
saying something.
Yeah. So there were all those promises of that the UK economy won't be affected by Brexit vote, but obviously they were. But right now it's very, very busy. How about yourself?
Well, look, certainly, looking at it from a residential point of view, the stuff that we're doing around that sector or this sector certainly seems to be consistent with, an improvement in the mood music. I'm not sure it's necessarily coming through in some other sectors. Whether the commercial sector is seeing the same sort of improvement in sentiment, I don't know. And we've actually got our Q1 commercial property monitor questionnaire out in play at the moment. So hopefully fairly shortly we'll get the feedback on that and I'll be able to get a broader perspective. But as you just sort of put up there, overnight we've released a residential market survey. It's, as you know, it's a monthly survey. We've got the February survey, the February iteration that is now out. And the numbers there are, the feedback that we've got, and this is from RICS members, remember, both agents and valuers, and we always want more valuers involved, as we were discussing. There's definitely been a bit of a shift. I would add, actually, though, that there is also, if you look at the comments, still a little bit of caution out there. So I was interested in your experiences and what I'm seeing in some of those comments. I mean, I think that most of the respondents are saying that there has been that shift, but I think they're still a little bit wary. I think they're still, the macro, the economy still sort of, is a little bit of a concern for people. They're just not sure we're over the hill yet coming down. I think we are, but, I think there's just a bit of nervousness that we're not quite there yet. I don't know. It's interesting.
Yeah, I think life is different now, isn't it? I mean, when there is a big event, like we were chatting about before we went live, that when there's a big event, it used to really shock people to the core, and it take a very long time for confidence to resume. But I think that we're so resilient now. There's been so many issues that maybe life goes back to normal quicker now than it did before, because we're just used to dealing with the punches, as it were.
Maybe. I mean, I suppose you've still got that. I mean, I don't think political risk is a major factor now, but you've still got, some big elections. You've got a big election here, likely sooner rather than later, perhaps. You've got obviously the US election, which has ramifications for the global economy, perhaps financial markets, which may or may not have implications for the residential sector. So I suppose there's quite a lot going on, but perhaps, the market is better able to, as you say, sort of move with the punches and handle itself than perhaps in the past.
Yeah, and I think that there's a pent up demand, isn't there, from last year, that we had rising interest rates, mortgage rates going up into the 6%, where you could have picked up a mortgage starting with a 2, and a lot of people remortgaging, having that real shock, price of everything going up, and the cost of living crisis. I think a lot of people last year probably sat on their hands thinking, "Oh my gosh, where is this heading?" Going through the winter, having to carry those electric bills and gas bills, and where is life going to be? And perhaps coming out the other side, realizing, okay, so mortgage rates are no longer starting with a 6; they're probably starting with a 4, so some maybe with a 3. So life goes on, and spring market is always quite busy, and I think that people say that the seasonality will return, and maybe it's an element of that we definitely had a slower December, but that was due to a cyber attack on one of our main clients. I don't know whether in the legal markets, yes, conveyancers were one of the main software providers had a cyber attack, and client data was all lost, and so yeah, there were sort of issues. So there's a few different reasons why the market is busy, but I think from looking at the sentiment survey and talking to estate agents that I know, they've been very, very busy doing market appraisals, looking to list properties. So it was interesting to see that sentiment across the board.
Yeah, no, that side of things certainly comes through in the survey. New instructions to agents and work by valuers seems to be increasing quite significantly. So what was interesting was not just that the new instructions were up quite sharply, and I think that's really an important element in a market functioning effectively. If you haven't got the stock coming back on the market, you've got a problem, particularly as we know that new build is still pretty constrained. Yes, I mean, I suspect that house builders are looking at the situation now and thinking, well, we might start building out a bit more rapidly on some of our schemes. It just feels a bit better, but I still think they're going to be moving fairly cautiously. They're not going to overdo that. So ensuring that there's some sort of second-hand stock coming back in the market is really important. So alongside that, we also track, what people tell us about appraisals. And that has now moved into positive territory on a year-on-year comparison. It's been, a constant sort of negative story on that as far as we've been seeing, what's been reported to us. And I'm not talking about, specific, valuers and agents may be seeing different volumes of workload, but what we've been seeing around appraisals has been negative for, pretty much since we started that series, because it's a relatively new one. So to see it moving into positive territory is encouraging, because it suggests the flow of stock going forward is going to continue to come through, which, as I say, is the lifeblood surely of this market. If you haven't got the stock there, then you've got a problem, and that has been an issue.
Yeah, it has, and I think there's been a lot of that. When you're thinking about moving house, what do you do first? Do you put your house on the market first and hope that something for you to move into is going to come available, or do you search and find something that you think, wow, I really love that. That looks perfect for us. Let's go and have a look and see it. And then if you love it, then you put your house on the market. So where you've got a lack of stock, there's not a lot for people to be seeing.
Yeah.
So
yeah.
now that we've got more stock that's coming to the market, then those people that have been sitting on the sidelines waiting to find the one, now maybe they're able to find it. So it's that catalyst that
Absolutely
they're now able to move.
I've got a question for you then on this theme, Joe, and I don't know if I'm bowling you a curved ball, but last week's budget, there were a number of measures which were designed, in truth, we're being quite honest about this, to move stock from the rental market to the sales market. And indeed, the Office for Budget Responsibility, if you look at its assumptions around transactions in the residential sector, clearly built in an uplift in the next financial year, the one that's about to start in April, on the basis of this. And I wonder, as someone who works in the industry, has worked in the industry, I mean, do you think that we are going to see that, the CGT change in particular was highlighted as something by the Chancellor that could trigger stock being moved, from, I suppose, the rental supply to the sales, but also a way that, the treatment on Airbnbs as well, or, those shorter term lets, I should say, really. So I wondered, from your experience, whether you think those factors will have an impact.
Well, when I was looking at the statistics of the survey, I saw that the majority of properties, the larger proportion of estate agencies that have got more listings were in Wales. So I wasn't too sure whether that's because Wales have been really tough on landlords, whether that all sort of coming to fruition means that there are more properties that are actually being listed because of government policies.
Could be interesting, yeah.
I think that with holiday lets, it's sort of, I don't really understand why they've done what they've done. We're trying to level the playing field, I think, but they also don't want everyone going on holiday abroad. They would like to keep the money internally. So I think that holiday lets, it's a good revenue stream, but it's great for UK population to be able to go on holiday internally within the UK. I do follow some people who are sort of serviced accommodation specialists. Samuel Leeds is someone I'm sure most people will follow. He's very, very noisy, and I wonder whether some of these policies have come in because of characters like that. But there's lots of money to be made in serviced accommodation, and I don't think that that's going away. I don't think that the new legislation that is coming in, which is basically you can't reclaim, you can't offset your furniture and different elements like that against your taxes anymore. I don't think that's going to be a huge stumbling block. And they've been pressurizing landlords for a very long time. I sold my portfolio of residential buy-to-lets a few years ago, just with the mortgage relief, really. So I think that most people that were going to go have already gone. So I'm not too sure myself really on what.
Okay, interesting. Yeah.
Whether it's gonna actually add more fuel to the fire.
I mean, in a way, I mean, I understand that they're concerned about affordability issues in places like Cornwall and local people struggling to find access to accommodation, and that is a more general problem. But I do wonder whether, for all the talk about trying to get 300,000 new homes each year and claiming they're on target for this, just the bottom line is not enough has been built, and all these tax changes and trying to shift properties from one tenure to another is just sort of moving the decks around the chairs around the Titanic, rather than actually getting to the grip of the problem, which and it's a challenging problem, because let's be honest, building more homes isn't always popular for everyone. We know that, but somehow when you've got an expanding population, and indeed a population that in some areas, in many areas, notwithstanding what you said about lower mortgage rates, is still finding affordability a constraint, and particularly deposits. If London and the southeast, we know that deposit requirements are still substantial, and so I still think fundamentally the real issue is a new supply issue, and these tax changes are just sort of moving things around a little bit, and probably not going to change the dynamics majorly.
Yeah, and I think that I also think that there needs to be focusing really on the quality of the new products that are coming on the market as well. It's not just trying to hit 300,000 units and great, haven't we done well? Some of these office blocks that are converted into residential, the schemes are not very good. And you also have to look at those units that are being built. How many of them actually are available for purchase? A lot of them are just rented out. I mean, I see lots of these blocks of flats. Another one landed across my desk this morning, block of 35 flats that have gone into receivership, where landlord has obviously converted an office block into 35 one-bedroom flats that they're renting out, and they're all for sale at once. So that they're not available to the first-time buyers to be buying, because the office to resi permitted development is being used for more build to rent, rather than selling them off as individual units. So I think there's a lot that needs to be done. But when you've got sort of the revolving door of the housing minister, how do you get any consistency and how do you get someone to actually look at what housing is needed, where the housing is needed, and changing and planning laws? It's all great, but you still have the NIMBYism, not in my back garden. And it's tough to actually get planning consent for local affordable homes in local areas, because people don't want to see new homes built in their local areas. So it's a challenge, and it's a continuing challenge. I think they should really, rather than focusing on trying to deliver 300,000 new homes in a year, I think someone needs to really tackle, how do we improve the quality of the new homes that are being built, and how do we change the planning structure so that it's maybe more of a centralized decision on where homes are needed and built, as opposed to a local level where perhaps so and so that's mates with so and so down the road doesn't give planning consent because they don't want to overlook a new build development, and they're the local MP or whatever it may be. I think there's still a lot of the localism. It works on some levels, but then trying to hammer out some real numbers for the greater societal need is sometimes hampered.
Well, I suppose fundamentally, if you don't deliver the infrastructure to support a new housing development, when that infrastructure doesn't just mean roads, but it means all the things, and often schools are part of the community infrastructure levy type sort of tariff, but or Section 106. There will be those things, but clearly, if there's not enough infrastructure put around new developments, and it puts an additional squeeze on the character of life for many local people. It's not just the housing which might change their view, but it's all the things that their day-to-day life which is impacted. So I do recognise that when we actually think about these developments, it's got to be done in a way that it is one sympathetic. And you're right. I mean, quality is clearly important, and I think there is an increasing focus on this. One might also want to think about sort of the greener credentials. I'm not saying we want passive house standard, but sometimes when you look at the quality of the build and the insulation and this sort of thing, fairly basic stuff, you wonder whether it's being built with a decent lifespan ahead of it. Given some of the obvious changes that will eventually come through.
Yeah, and house builders keep on buying one another and getting bigger and bigger and bigger, which I suppose is like the banks. So, I mean, do you have any thoughts on Virgin Money being acquired by Nationwide? And so now it's probably looking like it's the big five rather than the big six. And obviously sort of liquidity issues in the marketplace. And do you think that brings a risk into the economy?
Look, I'm not overly concerned at this point, but clearly, that you can get, and I suppose it's when you get those pressure points that you might actually in the macro cycle that you might find that liquidity issue becomes more marked. I don't sense, this whole cycle has been characterized by much less pressure on certainly the UK banks. I mean, obviously there have been a few high profile cases in the US where specific lenders, particularly related to CRE rather than residential, had built up a lending book which put them in serious difficulty. But I mean, this cycle, I think the way that the whole the way that the prudential approach has ensured that banks are much more cautious, and I think they themselves probably didn't really want to go down the route that they did at the time of the GFC anyway. So I'm not immediately concerned, but clearly concentration can bring or increasing concentration can bring challenges at some point. I don't think we're there at the moment, but it's something to keep an eye on.
Yeah. I think that's sort of the same thing really with the house builders, that they are relying more and more and more on subcontractors to do their one little piece in the jigsaw, and there's no sort of glue that holds it all together. And I think the clerk of works should really come back to help provide good quality homes. But we're digressing away, I suppose, from the sentiment survey of and the reason why we're here today. But it's good to have a chat about the supply issues. And I think that you're right that the lack of new builds will create stimulus and demand on the second-hand homes. And I wonder as well, I do property development on the side, so I buy property, refurbish it, sell it, rent it, whatever it is. If there's as a valuation surveyor, I know when something is a good price. I know how much I can sell it for, so I'm in a good place to be able to find those deals. And you over the preceding years, it's because there's been a lack of stock. I've not done anything because there's just no margins in property. But with interest rates rising, the disposable income isn't there. So I'm wondering whether there's going to start to become that sort of like gap again of properties that are fully refurbished, where you can put the new kitchens already in, the new bathrooms are already in, and the property is all singing and dancing. You can load that into your mortgage. So your mortgage is paying for all of that, rather than buying something for less money and then having to spend the money on the kitchen and the bathroom and refurbishing it. I'm not sure whether people will still have that money aside. So I'm sort of hoping that maybe that disparity may start to emerge again, which will then create that new market for developers to come back in and to start to refurbish, which then trickles down into your general builders, painters, decorators. You're buying materials and pushing the market forward, which it is a cyclical event. You have to sort of consciously decide, now's the time to step out. There's just not enough margin to take this on.
Yeah, interesting.
Yeah, and I think the change in stamp duty as well for properties in where you have multiple dwellings relief. So for if you buy a property and it has maybe an annex, a gatekeeper's cottage, whatever it may be, then there is a reduction in stamp duty, which they have removed that. And I don't think that's going to have a massive impact on the market. And I think, but we'll wait and see, won't we? Really.
Were you hoping for anything more in terms of the market? I mean, were you seeing scope for, I don't know, any any more generalized stamp duty break or something like that, or?
But I'm just a believer of like the market isn't broken, so don't fix it. I think that Help to Buy has a lot to answer for. There are a lot of people that will be stuck with Help to Buy for a very long time, where prices were inflated, people were trapped, and yeah. So I think that sometimes less is more. But yeah, I'm sure other people have got wider views. But I just kind of feel as though if you're going to take stamp duty in, then maybe use the stamp duty to end homelessness. Like, where does that stamp duty go? I worked out that if you took 2 years worth of stamp duty receipts and you used local authority owned land and put the land in at zero, you could actually provide enough housing to end UK homelessness just in 2 years take. So digressing away from what you're saying, but I kind of, if you're going to look at everything holistically, then you need a housing minister who's in the job for more than 5 minutes to have a look at the principles of the economy in a wider view, really.
Yeah, I was pleased that we didn't see any more demand side incentives, and I'm sure that some people listening into this will take issue with me, and that's absolutely right. But I was not overly impressed by Help to Buy, and I've had that discussion internally at RICS, and I was not particularly fond on this notion that the flag waving around potentially a 99% type mortgage. I can see that it helps some people, but my worry is that these things get capitalized in prices pretty quickly, and I think that doesn't then fundamentally address the big issues here. We don't want to get back onto new build, but that fundamentally, if you pour oil on the flames of the sort of demand without providing a requisite uplift in supply. And I know Help to Buy did increase supply a bit, but the bottom line was that a lot of that benefit did get capitalized in price. So I'm wary of demand-led incentives, and I know that some people, as I said already, will probably take issue with me, but I'm willing to have that discussion.
Yeah. Well, that's everyone's entitled to their own opinion on matters, and that's what a great debate is all about. And I agree. I think that providing new homes as well, you're kind of setting people up for a fall in some ways, because they're paying the 100% maximum value that property is going to be worth. It's like buying a brand new car from a showroom with no miles on the clock, and in 2 years' time, if you want to move, well, you've been living in that property for 2 years, and you may have spilt your cup of coffee on the carpet, and
it's never the same
the way they are, and all of the neighbours are in the block, so the common part is a bit tattier. Are you going to be able to get your money back? So whereas when you're buying second-hand stock, then there's sort of lesser risk there, and so some of these buildings are obviously targeted to first-time buyers who need the help to get on the ladder, but then there's a sting in the tail later on, and if you're buying with Help to Buy, or if you're buying shared ownership, then they need to have independent valuations done at the end, and they're only valid for a certain period of time. There's quite a lot of costs that are associated with the I suppose nothing in life is for free.
No, absolutely.
So I'm going to just try and share my screen now, because the file which I had up was of the older survey. So just give me 1 second. So here we go. So this is the current February edition of the market sentiment survey, which has just been released. So would you like to maybe just have a tour through the results?
Yeah, well, I mean, look, you've got the nice headline there. Buyer demand does, pick up. So, though, just to be clear, we don't measure actual numbers. We're not clever enough to do that in terms of the responses that we get in. What we have done, and we have found is pretty effective, is try and capture these measures in what we call a net balance format. So it sounds complicated, but honestly, it isn't. We simply get, we look at the number of responses we get. We ask people whether things have gone up or down. We take one away from the other in percentage terms, and what we get left with is a net balance. What we found is net balance is a good lead indicator. So buyer demand is actually a good lead indicator of mortgage approvals, the number of mortgage approvals or percentage change, depending on how you want to structure it. And these charts, by the way, lead indicator charts, are used across, by financial analysts to try and interpret what's going on. It's not me saying this. It's if you look at the consultants like Capital Economics, they will often draw on our data and use the metrics as a lead indicator for what's happening. So buyer demand signaling an uplift in mortgage approvals, which we know actually has already begun to come through, looking at the Bank of England data. And then you say, new instructions to sell, again in net balance terms, that has gone up higher. So that's encouraging. And, we've also found, we ask people, we ask our respondents, our members, agents and valuers, what they think will happen to sales, both in the near term, so a 3-month view and a 12-month view. And there's certainly some good feedback coming in around those sorts of numbers. So if you look at sort of obviously these are net balance, and I don't want to overstate them, but something like 42% of net balance of 42% of respondents said they expected sales to be up over the next 12 months. That's similar to last month, 44. If you go back to October last year, it was pretty flat. And then through last year, the numbers were all negatives. These are, so looking 1 year out. So we're now getting positive readings. And it's interesting because just having a look at this, and I know you mentioned the B word, Brexit, earlier. Well, I've had a look at the time series here, and that 12-month reading, and I say it is a net balance, but it's, there was a brief spell in 2019 when we got to that level previously, or this level previously, but really the longer run of positive readings that predates this current uplift was sort of 2015 running into 2016. So, I mentioned, earlier that some of the comments are a little bit cautious still, and I understand that. But if I look at these sorts of forward-looking metrics, they are positive, and that is indicative of that sort of shift in expectations, about what is likely to happen. Because remember, as we move through this year, interest rates, I would bet they will come down. I'm not going to bet how much, and it may not be as much as we want, but they are going to start coming down. And that will mean that mortgage rates, which have already come down a bit, and you've mentioned that pattern seems to be stalling just at the moment. But I think we will see further lowering in mortgage rates in the second half of the year. So that perhaps explains some of this positive mood that we're seeing in terms of these numbers.
Yeah, that's great. Yeah, I think it depends where you are as well. So I practice in London, so obviously, and London I think is booming, doing very, very well. But I'm one of those people that during sort of lockdown periods, we decided that we wanted to move out into the countryside, and so we sold up and we bought somewhere out in the country with lots of land, and we have a small little gates house, and we got the local estate agent out the other day just to have a look to see what it was worth, because our tenant moved out. And it was interesting to hear his sentiment over the sentiment of the agents that are in London. He was a lot more dour and a bit negative about things. So I think that the beauty of this survey, the sentiment survey, is that you are capturing people across the UK, and it breaks it up into regions, so you can actually see how people are feeling in certain areas within the United Kingdom.
No, that's absolutely right. I mean, if I look at the 12-month sales expectations, just the headline numbers, London actually at the moment is topping the list. Net balance plus 73. So that is really strong. And, London has had its problems. So, in terms of activity and affordability is still a big issue. But there's no doubt that the sort of sentiment that you're reflecting is coming through there. I think bigger cities. I mean, I noticed the Northwest number is pretty strong at +60, so capturing the Manchester effect. That seems very positive. And Northern Ireland and I have to say Scotland are both areas where we've had fairly solid sets of results, and the actual headline numbers now aren't quite as strong as the London number, but they have been stronger through much of the recent period. So it's inevitable that they are going to slow down a bit. But yeah, generally, there are clearly regional trends. But I mean, I would, just looking at that, I would suggest that the sort of, there is a broad-based improvement, but London definitely seems to be having had a difficult period, seems to be running a little bit ahead of some other areas, certainly in terms of expectations.
Yeah, I also read somewhere this week that office demand is now back up to quite high levels, so since COVID. So I wonder as well whether this is people had escaped to the country and now actually no, we want you back in the office, and so people are coming back to the cities again, coming back to the urban areas for work. Whether there's an element of that as well, but it shows in the numbers that there are more properties that are coming to the market, and as surveyors, as estate agents, this is what people need, right? We need to have the churn, we need to have the volume, and particularly where it's a rising market, then there's that activity, there's that pace. We was probably maybe Q3, Q4 last year. It was difficult because everyone that we were pricing up for a home survey, cost of living is very much at forefront of people's minds. So we're haggling on fees, and it was a bit of a slog. Whereas now that prices are sort of edging up, and there's that demand there, there doesn't seem to be that same sentiment. People just want to crack on and move, which is great, really.
Yeah, I think that point about offices, I mean, I saw that story as well. Office, occupancy levels hitting the highest level since the start of a pandemic. And I think they pointed, to a lot of those sort of cities such as Bristol and Cardiff, which were seeing good numbers. And, also more office occupiers coming back in the London area as well. So more going on there as well. But, a lot of the sort of cities around the country also seem to be seeing a lot of that benefit as well. And I'm sure you're right that is helping to shift the dial a little bit around where people want to be, and their confidence around sort of living in sort of different locations, but cities in particular, obviously.
Yeah, and I think Bristol was voted the best city to live as well in the UK. I went to university there, and it is a fantastic city. So what about the lettings market? How do you feel? Renters are obviously in a spiral where rents are just going up and up and up as landlords are having to sell out. So any news for tenants this month?
Well, what you can see from this is these charts here. The top one on the left is our tenant demand indicator. That's a net these are all net balances again. And I know others like Rightmove and Zoopla will give some hard numbers around some of these indicators, but these are pretty good, reliable metrics again. So you can see the top one is demand, the middle one is effectively new instructions, and that's been now negative, really going back to the middle of the last decade. So when those tax and regulatory changes started being introduced, you can see the impact of that. And then you've also, the third chart is the rent 3-month rent expectation series, and it's clear that tenant demand isn't growing at the pace it was. But who would have thought it could be sustained at that pace anyway? Because it had you had the whole impact of the COVID impact. You had issues around affordability in the residential market. It was going to slow. What you're finding, I think, is affordability is an important factor here in the rental market. And I think, a lot of renters are weighing up now whether they're better off actually in the sales market, given where rents stand. And I think that might explain some of this. The middle chart tells us quite clearly that, new instructions are still in negative territory. So there's not more property coming onto the market. There seems to be less looking at that, which means that you've got an imbalance. Now, the imbalance is not what it was, in terms of there is, that slowdown in tenant demand means that if you look at the comparisons, the gap between the top indicator and the middle indicator has narrowed, but it still means rents are going up. They're just not going up in double digits. Now, that's obviously, I'm talking at a very general level. And, there are going to be parts of the country, there are going to be specific locations within parts of the country where rents are pretty flat. But the overarching picture we're getting back from respondents to the survey is rental growth is still happening. It's happening at a slower rate than it was before. And what I've seen in terms of the marketplace, people are talking about, I don't know if this comports with what you've heard, perhaps 5% rental growth this year, not the double digits that we saw last year, but 5% on top of the double digits from last year doesn't make it any easier for most tenants. But there's not enough incentive there for landlords to come back in the market. And you obviously gave your own example of, selling out on this market. So, some landlords will come in, but, arguably, and we just touched on that earlier as well, if anything, the budget measures at the margin might actually lead to that negative trend in instructions being extended as, perhaps people take advantage of that CGT change to sell out and perhaps the property returns to the sales market. But all of that exacerbates the problems for renters. And that's the story of these three charts.
Yeah. Airbnb, Booking.com, they're taking the residential stock, aren't they? If you want to go down to Devon or Cornwall, you can get the same price for a week as a landlord as you can for a month on an AST. So you can understand why. And I wonder as well, like if we're starting to see a softening in demand from tenancy, whether a lot of people, quite rightly, have been fearful for a number of years now, expecting the residential property market to crash. The media have been constantly barraging residential values, saying, property prices are going to crash by 30% or they're going to crash by 20%. They've been hammering it for a long time. So I wonder how many people actually did cash out, went into rented while they waited to see what happened. And unfortunately, inflation has probably eaten away at their savings. And unfortunately, that time hasn't arrived. So whether they're getting back into the market now, who knows, I guess.
It's partly a media story, but I suspect that people, when they see evidence that prices are perhaps slipping a bit, may be inclined to hold back. I think of my own gut reaction in terms of, say, shares. You don't want to buy a market that's going up too much, but on the other hand, when markets start falling, you think, there's better value, but then you're still always concerned. Is the market got further to adjust? And I don't need a media scare story to impact my behavioural approach. I think part of that is that human response to, if prices are going down, are they going to go down further? So I understand why people might have held off, but I do take on board your point that, now that seems to be shifting, that mood, that, some people who've been standing on the sidelines are probably saying this rental market's costing me an arm and a leg. I better perhaps see if I can, not necessarily easy, but see if I can get on the ladder. Yeah,
definitely. Having a bit of a wry smile thinking about those people that know me well, and the dreaded word crypto as well. It's like the same thing, isn't it? The prices are coming down, and no one buys, and now all of a sudden it's at all-time highs. But that's one thing I was going to touch on quickly, really, as well, is Bitcoin is at its all-time high, gold is pretty much at its all-time high. The assets, stock markets are up, residential prices are up. It just feels like everything is sort of aligning and booming right now, isn't it?
Yeah, if anything, real estate, I mentioned earlier, I'll be interested to see what we're getting back on our CRE survey. But, I think real estate probably more generally is lagging. When you look at, and to be fair, the UK stock market is up, but it's not been booming in the same way. But anything to do with tech clearly is. So when you look at a lot of those sorts of, you look at, obviously the US stock market, you look at the Japanese stock market, you look at sort of some of the other stock markets around the world are all hitting highs. Bitcoin, as you point out, and doing likewise. So there definitely does seem to be, there's a bit of frothiness about some of this, and it may come back a bit. And I suppose the good news is that the real estate market here hasn't got that frothiness. So, I think at least we might feel relatively well insulated, even if there is a bit of a pullback in some other asset classes. Residential and commercial real estate are just beginning to sort of emerge, but not booming as such yet. So I think there's a slight difference in interpretation between how markets are behaving.
Yeah, it feels commercial real estate, I think, definitely is lagging behind. I don't specialize in it in the same way that I do residential, but it definitely does feel like it's still lagging behind, and it's great investment opportunity. So thanks for going through that today. I think there was one message that we wanted to get out loud and clear today, and that is for any residential valuers, any RICS registered valuers that are listening to this. This sentiment survey is very much for you, and we would really appreciate you feeding in. And we've taken some feedback that some of the questions are sort of positioned more towards members who have estate agency divisions to their businesses. So Simon and I will be working on a few questions just to try to reposition a few areas. The core data is going to remain the same, but we will see some potential new questions adding in some new data sets. So if you are a residential valuer, please do fill in the forms. Please do get in contact with Simon. We mentioned before about free advertising, and Simon said that the Financial Times has picked up on a number of members' comments from the sentiment survey. So people are being mentioned in the Financial Times for this. So from a free sort of advertising perspective, you're able to say that you are featured in the Financial Times because you have contributed to this survey if they call upon you. So it's not just you giving your 2 pence worth, your opinion for nothing. You actually have some real opportunities to be able to further your own personal brand, your own personal profile, and your business profile. So please do make sure that you take part. The more data we have, the more robust and the better the survey is, and the more you're involved, the more you'll get out of it. I'm not sure if you have anything else you'd like to add to that, Simon.
No, just to reiterate that we really want residential valuers involved. Please do contact me, if you've got any questions about the survey. And, so I'm working with Joe on trying to reposition some of the questions. We'll see how we go with that. We always make sure that as a contributor, you get a link to the survey the morning of the issue, so you'll immediately be aware of when the survey comes out and be able to access the report. And, if you do have any questions as a contributor, you can always come directly to me, and I'll always try and address them, if there's some data you'd like to see or anything else. So, hopefully there are some benefits of being involved in this. And, ultimately, we want it to reflect well on our ICS. It's yours. I am the custodian of this, but it is, it is the RICS members' product, and ultimately, I will move on, I will retire, but this survey will go on. And it is really about members, positioning this survey to reflect, the professionalism of the RICS, brand. And, so really very much sort of welcome your involvement in all of this.
Yeah, thank you very much for everything that you do. And don't forget that obviously when you're filling out the sentiment survey, it is 20 minutes free CPD that you can log, and also watching these episodes as well. You've got 45 minutes today of some informal free CPD. So make sure that you're thinking about the wider picture and continue to engage. Don't stand on the sidelines moaning about RICS. I think that you should come and join us and help to champion RICS to be the best organisation that we can possibly be, to make sure that we are all getting the most out of it. But anyway, thank you very much for your time, Simon, and your insight. I look forward to the next session with you and to see how the market pans out.
Indeed. Thank you very much, Joe. Nice to talk to you.
You too. Okay, I'm going to end the stream now. So thanks everyone for watching. Please do like and subscribe, and push this out as far as you can so that everyone can see what we're up to. And then people will realise that actually, if they want to have some up-to-date information on what's happening in the UK house prices, that the RICS sentiment survey is the best barometer.